Global market instability and historically low interest rates have investors stashing their cash in real estate. We'll explore this trend. Plus, how do private equity firms manage multiple asset classes? We'll look at the business from the inside out. This is 7-Day View.
Welcome, I'm Lydia Morrish.
And I'm Mitch Rochelle, and here's what's trending. There's good news and bad news coming from the employment market. According to the PwC Trendsetter Barometer, a leading indicator of future employment trends, reveals that only 4 of 10 employers plan to increase their headcount, and employers also indicate that they plan to keep wages flat. While slow hiring and flat wages doesn't really feel like good news, the silver lining may be that employers expressed plans not to reduce their workforces in the quarters ahead.
Emerging markets are home to a staggering 85% of the global population. And with nearly 90% of people under 30 residing in these markets, it should come as no surprise that customer expectations are driving the growth of online transactions. A recent PwC report showed that emerging economies will set the pace for markets worldwide in creating state-of-the-art payment systems. With the global middle class expected to expand dramatically over the next several years, it is likely this will be one of the key drivers in growth in electronic payments.
We've talked often about infrastructure on 7-Day Yield because the appetite for infrastructure investments is intense. The PwC Infrastructure Deals Update indicates that global funds have a record $142 billion in dried powder sitting on the sidelines and wait, and roughly half of that is targeted for U.S. projects. The resilience of the U.S. market is cited as the top reason why investors have the U.S. atop its shopping list.
Well, everything from Brexit to geopolitical risk is impacting investor behavior and sentiment. Our own Gary Meltzer and Byron Carlock recently discussed how investors are rotating towards real estate in these volatile times.
We've heard so much over the last 6-7 weeks on where things are in Europe surrounding Brexit. So as we look at the real estate market, valuations, kind of just generally what's happening from a capital perspective, what do we see now kind of 6-7 weeks post-Brexit?
Well, I think that the fundamentals at the property level are still very good. The fear has been at the fund level where there was a rush to redemptions. And so many of the funds, I believe 7 of the big funds, shut down their redemption programs, which then created a bit of a panic as to the liquidity. The reality though, Gary, is real estate is not an ATM. So when there is a fear like that and you rush for redemptions, it's going to affect the health of the fund. So frankly, I think the sponsors were smart to shut off the redemptions because the property level fundamentals, occupancy, net operating income, tenant base, strength of the properties, frankly, all still very good. There's expectation that some tenants might leave if they have euro-denominated businesses that were being domiciled in London, but frankly, not a whole lot of that's been announced. So I think that right now the property health in Great Britain is still quite good. I think there is a fear that it might deteriorate, but as of now the fundamentals still appear to be good.
We've obviously got a long way to go on this. And we have to look at the asset class and have to believe there's tremendous opportunity across the market for the asset class.
Listen, if you and I took a flight over today, we'd see a lot of our friends in the private equity real estate business going over looking for those opportunities.
Absolutely.
One of the major funds in the world today did choose to devalue their holdings from a valuation perspective in the expectation that Brexit will devalue real estate in the UK. So if that is the case, there will be buying opportunities. The reality is London's going to be an important financial center for a long, long time.
So shift gears for a moment domestically. So the markets, the equity markets, the fixed income markets have been very volatile. We've been experiencing some fairly significant redemptions in the traditional mutual funds over the last couple of months. There's certainly been flows into passive investments, but it can't all be going from active into passive. How does traditional activity and redemptions impact the real estate investment market and what we're seeing there from a flow of capital?
Well, whether we agree or disagree that the geopolitical context has inspired some fear, fear often takes people to redeem and go to cash. We're also seeing the phenomenon of folks going into hard assets, the desire in times of uncertainty to invest in something where you can see, touch, and feel. So sponsors will be smart to offer products that allow investors to choose from a menu of options that satisfy their hard asset allocation desires.
And Rachel Klein joins us. So Rachel, back here at home, real estate still remains a core holding of both individual and institutional investors, but we're pretty deep in the cycle. So is the anxiety level of investors starting to really grow?
Actually, we're not really seeing that in terms of performance as it comes to real estate. I think Byron said it very well when he talked about real estate being a hard asset and people putting money into those types of hard assets when there is levels of uncertainty. If you look at the public REIT market, the stock prices have just been rising over the last several months, and certainly in private equity, the values have been increasing as well.
Well, Byron referenced redemptions, and he said initially post-Brexit there was this big rush for redemptions. Have we seen that slow down since then? Have things calmed?
Yeah, certainly. We're also seeing that. I think anytime there's a big announcement or any kind of event that creates upheaval, you tend to see a rush to redeem and get to liquid assets. But we certainly have seen a calming of that trend.
So more of just a knee-jerk reaction?
Sure, as things start to settle in.
Great.
I like calm. Calm's better than anxiety. On 7-8 Yield, we've explored private equity several times from the outside in, but we figured we'd do it from the inside out. So I sat down with the CFO of a multi-strategy investment firm to understand how they manage assets across differing platforms. Take a listen. John, your organization is a multi-platform, multi-asset class asset manager, so maybe you can explain to the audience how you toggle and juggle between different strategies.
Sure. Deerfield Management is an investment manager solely focused on the healthcare sector. However, we express our investments in 3 general platforms. We have public securities, buying and selling public securities. We have a venture capital arm, which is early stage private company investing. And we have something in the middle, we call it our private design structures, where we do structured transactions, structured deals such as loans, royalty purchases, creative sources of financing for companies in the healthcare industry. And we toggle it primarily based on need and where we see an opportunity for strong healthcare investment.
So as an insider has to manage those different types of businesses, is it difficult to build an organization from a back office perspective that can handle all those different types of asset classes?
It's challenging. It makes it fun and challenging. There's issues such as valuation and what do we carry on our books, our early stage investments. That takes a different skill set than how do we meet perhaps a margin call in our public securities funds, and the tax structuring in our privately structured transactions, debt investments, onshore, offshore things. So all those skill sets are needed to successfully manage, but it makes it fun for me and for the team.
So John, you mentioned valuation a few minutes ago, and you have a background, used to work here, as a matter of fact, you have a background in valuation. In a market environment like today, when there's a lot of volatility in the market, do you find valuation being a challenge with certain types of investments?
Yeah, absolutely. We have to focus on our current company we made the investment in, and has anything changed up or down, aligned with movements in the macro factors. We have to balance the two. I will do a bit of a commercial for PwC. You're not our auditors of our fund, but for complicated situations, we often bring in a firm, and actually Pricewaterhouse does come in and perform valuation advisory services to help us provide support for our auditors and give us a second set of eyes on our valuations or their valuations, which helps with investors, regulatory bodies, and of course, our auditors.
I love hearing that, John. Before I let you go, one of the things Deerfield is focused on also is philanthropy, which aligns very much with our strategy. So maybe you could take us through the philanthropic arm of Deerfield and why that's important to its stakeholders.
Sure, we're extremely proud of our Deerfield Foundation. It's been around 9 years now. We've partnered with over 30 different organizations and have funded or committed to fund so far over $25 million. And it focuses on healthcare and children globally. So we partner with organizations here in New York City, as well as organizations in Africa and throughout the world. Anywhere we see a good opportunity to partner where there's an overlap of children's health needs and healthcare is a good spot for us to try to help.
And Gary Meltzer joins us now. Gary, is this a growing trend that we're seeing with asset managers in terms of expanding their product in hopes of perhaps reaching new investor audiences?
I think we've been going through convergence, for a period of time where you really have different asset classes being offered and different structures being offered to clients. And I think you're seeing that. There are still some that are focused, kind of solely in one place, one geography, one type of product or one sector, but you're seeing more and more where they're trying to attract different investors and they're going kind of across that product line. So you're definitely seeing that convergence happening.
Right.
Gary, last thing, at the end of that interview, John talked about philanthropy, and this isn't the only private equity complex that seems to have that philanthropic arm. Is that a trend we're also seeing more of too?
Absolutely, and I think you're seeing it in foundations that have been developed by founders as well as investing and growing capital for philanthropic purposes, but absolutely you're seeing that as a trend.
Excellent. Gary, you're always a staple of insightful information on 7-day yield.
Thanks, guys.
Thanks, Gary.
On our next episode, we sit down with an independent wealth manager, and we're also going to get a download on global economic growth.
Thank you so much for watching. Be sure to check out PwC's YouTube page and follow us on Twitter at the handle below. We'll see you next time on 7-Day Yield.